Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The AI rally stalls, global stocks losing ground as a disappointing outlook from chipmaker Broadcom hits sentiment. Oil falls as the US says Israel and Lebanon have agreed to a ceasefire if Hezbollah stops attacks. And Bloomberg learns that Germany, the UK and France are working on plans to engage Russia's Vladimir Putin in peace talks. Well, those are your headlines. A very good morning. Welcome to Thursday. The markets look like this. Red across the screen in the equities picture. Asian stocks falling alongside futures as the AI rally loses steam. This, as I say, after that weak forecast from the chipmaker Broadcom. And already we saw the S&P ending its 9-day winning streak in yesterday's Wall Street session. The latest US-Iran clashes damping risk appetite as well. So Nasdaq futures now down about 0.5%. Similar losses expected here for European futures. And flip over cross-asset, because today we actually have oil falling after 3 days of gains. This after Israel and Lebanon agreed that ceasefire on the condition that Hezbollah also stops hostilities, which of course could help to unlock a broader deal between the US and Iran. So gold pushing higher on that. And after all these signs of resilience in the US labour market, lifted Treasury yields yesterday, traders ramping up bets that the Fed's next move will be a hike. Now you have the US 10-year yield dropping slightly. So we're at 4.47 on the 10-year, down 2 basis points. What are the risk events on the agenda today? Well, at 1:30 p.m. London time, we'll get the US initial jobless claims, continuing this run of labour market data stateside this week. At 4:40 p.m, we'll hear from the Bank of England Governor Andrew Bailey. He'll be speaking at an investment association event, and we'll also be treated to a little Fed speak from Mary Daly and Tom Barkin. Let's set you up for the day ahead. We begin with the AI-fueled rally that's powered global equities to record highs, losing momentum in today's Asia session. Let's go straight to Bloomberg's Winnie Su in Hong Kong. Winnie, what are you watching?
Yeah, good morning, Lizzie. We are seeing Asian stocks losing a bit of momentum today, down more than 1%. Now, that is mainly being led by, as you mentioned, the weak results from Broadcom weighing on overall sentiment. And hence, you can see that the tech-heavy gauges in South Korea, Japan, and also Taiwan losing more than 8%. Now, it is really about how this demand seems to be slowing down and potentially weigh on the supply chains in Asia. But you flip the board, we also want to take a look cross-asset at the Japanese yen, because we are seeing, in fact, Japanese yen, which has been weakening for the past 3 sessions, seeing a bit of strengthening today. We are hearing that the Bank of Japan officials are considering discussing a 0.25% rate hike when in the June meeting that is coming up, and also potentially another hike later this year. So that is really supporting the Japanese yen here, pulling away from that 160 level that is closely being watched for the intervention risks. Now, also flip the board, I want to show you how Asian markets have really been trending in the past year, because interestingly, we are seeing a divergence in terms of performance when it comes to the markets that have lots of AI exposure. For example, Taiwan, South Korea, and China's tech names versus the ones that don't have as much exposure in Indonesia and India, for example. And in fact, you're looking at the Indonesia market here down about 19% in the past year. And today it has fallen as much as about 5% to a 6-year low, with currency also at a record low. Now, this is all driven by the higher oil prices, the lack of AI, and further policy uncertainties in these Southeast Asian countries. Back to you, Lizzie.
Winnie, thank you for the update. That's Bloomberg's Winnie Su in Singapore. Well, let's dive more deeply into the tech story, shall we? Broadcom shares slumping in extended trading after the company delivered a disappointing forecast for artificial intelligence chip revenue. The numbers suggest that the firm's efforts to gain ground in the burgeoning industry are going more slowly than anticipated. Let's get some context now. We can speak to Bloomberg senior strategist Neil Campling. Neil, good morning. So are these results actually bad, or are they just not up to the lofty expectations that we have when it comes to AI?
I think you've summed it extremely well in terms of those lofty expectations. since the end of March, the stock was up 65% into earnings. It's the third biggest contributor to the S&P's 20% rally since that time as well. So great expectations and slightly below where the expectations were for the full year. It's partly a mix shift in terms of the timing, for sure, but obviously there was a lot of hope. And it's the first kind of negative data point, I suppose, that we've had in the whole AI narrative in recent weeks. So just at the margin, there's a little bit of a sort of a compression in terms of expectations maybe for the AI trade, which is not necessarily a bad thing, and it's not going to change the long-term opportunities for them and others, as we've heard from the likes of Google this week when they were doing their equity raise.
So they're still well priced then? Because, of course, you've got this interlocked web of all of these companies. Broadcom, part of a debt financing deal for Anthropic, and also delivering chips to OpenAI. So we can't really have too much disappointment from Broadcom when it's relying for so many other things.
Completely true. And I think the other thing they mentioned on the call, the CEO mentioned on the call last night, actually, that in terms of the timing, that they haven't got an exclusivity over, they're a main partner of Google, for example, with their chipsets for AI. But it's not an exclusive arrangement. And clearly, it's likely, they admitted, that Google would look to outsource to other partners as well over time as the technology evolves. But they also mentioned that they would start to deliver the OpenAI and Microsoft chips into next fiscal year. So there are other drivers coming through for other customers. It's a question, I think, partly on the timing side. But the pullback in tech, I think, is a healthy one because we've gone up so far, so fast.
OK, a little rational correction then. Neil, thank you very much. That's Bloomberg senior strategist Neil Campling. Well, as we say, that tech pullback is there already. It's set to continue into the US session. We're looking at Nasdaq futures pointing lower this morning. Currently, we're down 0.5%. Let's bring in Bloomberg MLive strategist David Savage now for more on that. So, David, good morning to you. How much will this news that we've seen out of Broadcom dent the broader AI momentum? Is this a sign that winds are changing or just a little bump in the road?
Good morning, Lizzie. Yeah, I think Neil's summed it up fairly well. We obviously have seen a pass through in terms of the Asian equity benchmarks, which are heavily tilted towards the AI trade, particularly in North Asia, and then of course the pass through in terms of U.S. and European futures. Both Asian equity benchmarks and U.S. futures are off sort of the lows of earlier in the Asia session. And I think, again, the context is that we've just moved, so quickly, higher that this is probably, a good setup for a healthy consolidation of those gains. And again, the read-through is that the guidance is still very strong. Overall guidance kind of came in, basically where the street was expecting. It was just AI-related revenue that was, a little bit below where those expectations had gone. And so, the look-through is still very positive, but probably a healthy consolidation here.
And what do you make of the Bitcoin moves? We're currently trading at $63,876 a token. It's really fluctuating all over the place at the moment, but basically hit by this risk-off trade. And we were under 62K overnight. That's a 4-month low. What do you read into those moves about broader sentiment, if anything?
Yeah. I honestly think there's not much of we can read through in terms of Bitcoin's price action, in terms of the broader risk sentiment. The last 6 months, Bitcoin has traded about 30% lower. Again, it depends where we are at any given minute. Over that period, U.S. semiconductor stocks are up over 90%. Historically, it has traded in line and been correlated with sort of the high beta equity momentum trade. That just hasn't been the case for several weeks. And so part of that could be traced back to weak sentiment as it relates to Bitcoin, some negative headlines as it relates to strategy starting to sell some Bitcoin, weak ETF flows, similar to what we've seen in gold in terms of weak ETF flows, ETF outflows. But again, I think the read-through on the broader market is probably pretty far and few between.
OK, David, thank you very much. That's our Bloomberg MLive strategist, David Savage. Well, turning now to the geopolitics, the US says that Israel and Lebanon have agreed to a ceasefire if Hezbollah also stops fighting. There's been no immediate indication whether Hezbollah has agreed and accepted the terms of that deal. But meanwhile, in the US, the Republican-led House has voted 215 to 208 to halt the war with Iran, reflecting growing concerns stateside within the president's own party ahead of the congressional elections. Let's get more now with Bloomberg's Abir Abu Omar. She joins us from Dubai. So, Abir, how likely is it that this agreement will hold up? And how likely is it that Hezbollah will agree to the terms of the ceasefire?
Yeah, good morning, Lizzie. I mean, look, it's important to note that Hezbollah, which is backed by Iran, has not taken an active part in those negotiations that were hosted by Washington yesterday between Lebanese authorities and Israeli counterparts. Now, what these two parties had agreed to yesterday was that if Hezbollah ceases its attacks against Israel and the northern part of Israel, then Israel will reduce its hostilities. Now, it's important to note the phone call that happened between President Trump and Prime Minister Netanyahu earlier this week that Axios had reported was expletive-laden, where President Trump told Netanyahu to take back troops that were supposed to be heading to the capital of Lebanon, Beirut. Now, Netanyahu said that he agrees to that, but that the hostilities against the southern part of Lebanon, the villages there, that Israel will not stop the attacks there. And currently, it's also important to note that Israel is having its deepest incursion into Lebanon in decades, Lizzie. Now, where that leaves the broader deal, well, President Trump overnight spoke again and says that a deal is near, in theory, that conversations with Iran may continue this weekend. But then he caveated and said, but they may not. And so we've ticked one element from the box, and that is Lebanon. Lebanon is a sticking point for Iran. Iran did not agree to go into further negotiations with the United States unless Israel's actions against Lebanon stop. And so certainly this is a step towards a more positive place. But Iran has not given any response to President Trump since yesterday. So we'll have to wait and see yet again to what the Iranian response is going to be.
OK, so potentially one sticking point a little closer to being solved. Meanwhile, you've got this US House vote putting pressure on President Trump. But how receptive will he be to it? He said he doesn't care about the midterms. He said he doesn't care about the oil price. Is it going to have an impact?
Yeah, and look, he can certainly veto this, right? But it shows just what kind of pressure President Trump is under domestically, with both the House and the Senate putting through this resolution that could make President Trump rethink the war in Iran. Now, I just want to bring back Secretary of State Marco Rubio earlier this week saying that, or defending the U.S. actions against Iran in Iran, as well as Israel's. He did concede that Iran's military power could still be there because some of the drones that they manufacture are cheap to make. And you could definitely see that translate into real life, Lizzie, right? We've seen attacks against Kuwait and Bahrain. These were the most serious attacks since the initial ceasefire was reached in April, about the beginning of April, with Kuwait's main airport significantly damaged, one person killed there, several others injured. So all in all, yes, President Trump is under pressure domestically. This solidifies the case that Iran is in no rush to come to the table for a deal. The U.S. maybe more so. But again, the last answer here is that we have to wait and see what concessions Iran is willing to give and what response they come up with to the United States and to President Trump's claims.
OK, plenty to watch as we head into the weekend. Abir, thank you for the update. That's Bloomberg's Abir Abu Omar out of Dubai, who'll be back with Horizons Middle East and Africa at 5 a.m. London time. Still ahead, though, on Daybreak Europe, how you may already own more AI in your portfolio than you think. We'll be speaking to eToro's global market analyst, Lale Akoner. But first, SpaceX is officially filing for its IPO, aiming to raise $75 billion in an historic debut that could clear the path for more mega listings. We'll get you all the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:17 a.m. here in London. Well, SpaceX has now officially filed for its IPO, aiming to raise $75 billion in the biggest listing ever. The share sale, set for June the 11th, should open the door to more mega IPOs and propel CEO Elon Musk closer to becoming the world's first trillionaire. Manuel Baigorri, who leads our APAC deals coverage, I'm pleased to say, joins me now. So, Manuel, you've been poring through the details of this. What else did we learn from the filing?
What an exciting, huge IPO, Lizzie. Definitely keeping us busy, and yes, a lot of interesting details, including the fact that they set a fixed price for the IPO at $135 a share. That is quite rare, quite unheard of, especially on big listings in the US, where they usually set a range, and then after they start testing the market with investors and doing the marketing, they go either at the bottom or towards the top. Here, you go with a fixed price already, probably showing the confidence in the IPO getting done, and also on how much investor demand there is globally for these type of AI-related businesses, right? So more in the horizon as well, with Anthropic and with OpenAI also kind of knocking on the door, and next to potentially list in what would be also billion plus, multi-billion dollar IPOs. But on this one, SpaceX, definitely all the eyes on this one, as is coming as soon as next week. Potentially the next few days will be very, very important to see how it's going to play out and how much real investor demand there is. But the expectations are really, really high. And as you said, it's going to likely make Elon Musk an almost trillionaire, which is kind of remarkable as well.
Truly remarkable, but I feel like we're being drip-fed details here. I'm just ready for liftoff already, Manuel. What's next for SpaceX on the road to this IPO?
Yes, so we'll start, Lizzie, the marketing with investors starts as soon as today, Thursday, and then obviously the next few days will be critical as they gather the momentum and they fill in the books, potentially offering the shares next week and the first the trading debut next week as well. So those are the next key steps. It'll be interesting to see what kind of demand they get, what kind of investors they get into the books as well. I mean, there's more than 20 investment banks working on this. We've also been reporting about the fees and how minimal they're going to be, yet banks will reap more than $500 million possibly in terms of banking fees for this huge offering. So there's a lot of nitty-gritty details that will come to light in the coming days as we have more clarity on the type of investor base for the IPO. But I think we now have a clear sense on the size. We have a clear sense also on the potential value, $1.8 trillion in market value. That is really huge. It's quite remarkable just compared with other companies, some of the biggest in the Standard & Poor's index, for instance. So definitely one. And I think what the main consequences for the rest of the world, not just in the US, which is a really hot ECM market right now, but also the ripple effects in Europe and here in Asia, where we are seeing a lot of AI-related IPOs here in Hong Kong, for instance. It will be interesting to see how they play out as well.
Yep. Really interesting to look at that global read across. Manuel, thank you so much for the analysis. Bloomberg's Manuel Baigorri there. And speaking of all of this, the Goldman Sachs CEO David Solomon's been talking to Bloomberg about how the bank secured its role in the SpaceX IPO and why we're seeing a rush of mega stock market debuts this summer. That's coming up next here on Daybreak Europe. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, the Goldman Sachs CEO David Solomon's been speaking to Bloomberg's Odd Lots podcast about the bank's role in that SpaceX IPO, the wider macro outlook, as well as how Alphabet is funding its next moves. Let's take a listen.
I think you're going to see, and Alphabet is the first one to make this decision, I think you're going to see a bunch of them fund a bunch of it with debt, but also raise more equity because they're starting to think about, okay, what does this look like? It's one thing, what does it look like this year, but what does it look like over the next 5 years? How much capital do we need? How much debt? If you get it wrong, if you totally rely on debt and you get it wrong, you will really regret if you wind up having a downside scenario that's tougher than you expected. We didn't win this in the last 6 months. We won this over the last 20 years.
Wow.
The decision wasn't made. The decision wasn't made until the last 6 months. And there's a lot of things that the team did over the last 6 months that contributed to the ultimate result, which, by the way, now we have to execute. But this is a cumulative effort of lots and lots of people over 20 years. And we first, as a firm, we first met Elon Musk. And the person that first was responsible for covering him was a guy named Stuart Bernstein, who was doing a bunch of stuff around, kind of green energy. And he and his brother had Solar City. And that's where we first connected with Elon. I do think we've created a regulatory structure and a market structure that really makes it unattractive to go public until you have to. The reason these companies are going public now is because they have to. They have capital needs that are so voracious that it is not prudent for them to try to do 100% of it in the private market and not have a public currency. It's just not prudent. And that's why I think you're going to see a bunch of these companies go public, because they actually need the capital. It's interesting. I've advised companies for years, and at one point 25 years ago, I actually ran the equity capital markets business at Goldman Sachs. That was a job I had early in my career in Goldman Sachs. And I used to say to companies, there are a few reasons to go public. You need the capital. You need the currency. You have to create liquidity for, early investors. But all the other stuff that people talk about is really not critical. We have a lot of things going on in the macro with the war, with the oil shock, supply chains, inflation getting stickier, that are going to have an effect. And, the market may absorb all that differently than it's absorbing it at the moment. At the moment, it's kind of brushing it aside.
And you can watch that full conversation on the Odd Lots podcast, which will be available from 9 a.m. UK time today. Now, to some other top corporate stories this morning. Bloomberg understands that Goldman Sachs and Morgan Stanley have been picked by Anthropic to lead its IPO. Sources say JPMorgan is also in on the deal. The artificial intelligence company is racing its rival OpenAI to be the first to go public. Anthropic was valued at $965 billion after its latest funding round. And Bloomberg has learned that members of the billionaire Glazer family have been debating whether to sell their stake in the English football giants Manchester United. We understand that the family as a whole has not made a decision as yet to exit, and different members of the family are still discussing the best path forward. Well, coming up on Daybreak Europe, oil dips as the US announces a ceasefire between Israel and Lebanon, while the AI rally loses steam. We'll discuss the market action with eToro's Lale, Akoner. That conversation coming up next. This is Bloomberg. Good morning from London. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. The AI rally stalls. Global stocks losing ground as a disappointing outlook from chipmaker Broadcom hits sentiment. Oil, meanwhile, falls as the US says that Israel and Lebanon have agreed to a ceasefire if Hezbollah stops attacks. And Bloomberg learns that Germany, the UK and France are working on plans to engage Russia's Vladimir Putin in peace talks. Well, a very good morning. Welcome to the programme if you are just joining us. 6:30 a.m. here in London. This is the picture in markets, read across the screen of the European and Asian and American equities picture right now. Asian stocks falling because of the AI rally losing steam. This after that weak forecast from the chipmaker Broadcom, and already we saw the S&P ending its 9-day winning streak in yesterday's Wall Street session. But Nasdaq futures pointing to even more losses today. We're down about 0.5%. Similar losses expected here in Europe. But flip cross asset, and we have oil falling today. So Brent down 0.7% at $97 a barrel. This on the news that Israel and Lebanon have agreed a ceasefire on the condition that Hezbollah also stops hostilities. So, of course, that could help to unlock a deal between the US and Iran. So oil down after 3 days of gains. Gold pushing higher on the geopol. We're up 0.8% now at $4,472 an ounce. And when we look at the bond space, those signs of resilience, more of them in the US labour market, lifted Treasury yields yesterday. You had traders ramping up bets that the Fed's next move will be a hike. Now we've got a little bit of a reversal of this. So we're on the 10-year down a basis point at 4.48. That's what's happening in your markets. Let's turn now to our front pages this morning. We'll start off with the Financial Times. They feature its own report that the UK Treasury is planning to take control of spending on a multi-billion-pound fighter jet programme, citing sources saying that the department's going to take responsibility away from the Ministry of Defence in a bid to avoid cost overruns. Then let's turn over to the Wall Street Journal. Today they're leading on the US House vote to limit President Trump's Iran war powers, describing the move as just the latest sign that the Republican lawmakers' support for the conflict is eroding. Finally, let's come to Europe. In Germany this morning we have Handelsblatt reporting on what it describes as a last-ditch attempt to save the debt brake reform, with the Commission tasked with reforming the rules said to be on the brink of collapse. So that from Handelsblatt. And you can get a roundup of all the stories you need to know to get your day going in today's edition of the Daybreak newsletter, which terminal subscribers can find by going to DAYB Go. Well, let's get back to the markets now, shall we? Nasdaq futures, as I say, pointing lower as the AI-fueled rally loses momentum from record highs. We can get analysis now with Lale, Akoner, global market analyst over at eToro. And she joins me in the studio, so good morning.
Good morning, Lizzie.
Nice to have you back.
Thank you so much.
Let's talk about AI. Is it worth hedging around AI?
Look, I mean, as we see, they're priced for perfection. So let's expect more volatility in the next few months. I think the fact that the ceasefire seems to be holding is going to be very positive because of the fact that, oil and rates pretty much driving the market right now. We do think that it will be a good idea to hedge, partly because of the fact that all these diversified ETFs that investors are investing in, they're very much heavily invested in tech. So we always say that, first of all, take a look at your tech exposure.
Yeah.
You're adding on more tech unknowingly. And therefore, we're saying that you might be more exposed to tech than you had planned for. So strategies such as low wall, which will be performing well when these crowded trades unwind. Low volatility dividend strategies in general valued. I think these are the areas that pair very well with AI related exposures, right? And a lot of market chatter about comparisons to 1999, 2000. I don't think that these two periods are similar in any way.
Okay.
Long rates are not where they used to be in that area. Certainly EPS growth and operating margins are very strong in the market right now, versus then all these unprofitable companies were driving heavy returns in the market, and therefore that unwinded.
It's a really interesting point you make that basically every company is a tech company at the moment, so you might be unaware of how exposed you are to AI. Specifically, though, in Europe, how do you play artificial intelligence?
Again, I mean, those companies that are very much spending, those companies that are heavily sort of like their capex is higher, we like that. We do like defense as well, more sort of like, again, tied to the defense expenditures that we're seeing coming from Germany, but other major developed markets as well. Cybersecurity is another area that we like. And of course, AI is one other sector.
It's interesting that you mentioned defence, because I've heard some analysts saying that you turn within defence away from tankers and more towards drones. As the wars have developed around the world, it needs to be a more specific defence strategy. What's yours?
That could be true. I think, again, the fact that the geopolitical environment is getting more and more complex. Again, cybersecurity, drones is another area, monitoring, communications, risk management, all of these are going to be very important in this more fractured geopolitical order.
And when we come to the macro, just going back to AI, can all this AI capex really offset the consumer weakness that we've seen, particularly in the US?
So far, it has been offsetting. I think the market returns that we've seen does point to that. I think that if the ceasefire holds, we will see consumer stocks and bonds coming back again, especially any coming down of pressure on the long end of the curve will help the market broaden further. So far, cyclicals, discretionary, consumer discretionary and consumer staples have not been performing. Healthcare wasn't great. Financials, because of the flattening in the yield curve, have been quite weak. I do expect those to come back again, especially in the second half of the year. Much depends on what the Fed is going to do. We don't think that they are going to hike rates. I think that they're still treating this as a supply-side shock and therefore temporary increase in prices and pressures on the inflation front. However, we do expect them to have a more hawkish stance and leave it to the market, if you will, to tighten financial conditions a little bit.
I mean, that's quite optimistic. It's really reliant on the idea that this war will wrap up. And yet, day by day, we see headlines that are conflicting. Strikes, encouragement that the talks are progressing, but it seems to be a back and forth. Are we not underestimating how long yields stay elevated?
Look, I think that both sides are under pressure in terms of, spending, right? So in the U.S., we've seen the lawmakers yesterday putting pressure on Trump to finish war. So I do think that there's massive pressure on both sides to make this come to an end as soon as possible. It depends on what the Fed is going to do, but we do think that they are seeing this as a temporary shock and therefore willing to look over this. And we do look at the Fed for guidance on that as well.
Just finally, is tariff risk even really on your radar right now? We had the latest tariff headlines yesterday, but the response from many people seemed to be taco, Just keep an eye out, but we know that Trump always chickens out, not my words, some of the guests.
I think the administration is trying to time these tariff refunds in a way that it will help the midterm elections. That is going to create volatility in the markets. However, again, those sectors that have come under pressure last year might see a boost in their spending for next year, for this year, such as, for instance, auto, right, that have come under pressure last year. So again, I think much volatility is expected on the tariff side as well.
Okay, volatility everywhere, it seems. Lale, good to see you. Lale Akoner, Global Market Analyst over at eToro. Thank you very much. We're coming up on Daybreak Europe with the future of UK Prime Minister Keir Starmer hanging in the balance. Former Health Secretary Wes Streeting tells us there shouldn't be a coronation for any new leader. We'll bring you some of our interview with him next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:41 a.m. here in London. Well, following a bruising round of local elections for the Labour Party in the UK, the former Health Secretary Wes Streeting resigned from his cabinet position in order to prepare a possible challenge against Prime Minister Keir Starmer. Streeting sat down with Bloomberg's Francine Lacroix at South by Southwest London, where they discussed the state of British politics. Let's take a listen.
What I find remarkable about those election results is there is next to no discussion, actually, about how bad those results were, not just for the Labour Party, but for the country itself. Because for the first time in Britain's history, we have nationalists in power in every corner of the United Kingdom. Northern Ireland it obviously didn't have elections and is a slightly different, to put it mildly, history. But the SNP were re-elected in Scotland, despite a pretty abysmal record over the last 2 decades and being mired in the scandals of salmon and sturgeon. In Wales, we got absolutely smashed. This is a country that has been Labour since the birth of the Labour Party. And although I wouldn't put the SNP implied on the same part of the political spectrum as Reform, we've got a dangerous kind of English nationalism in play now as well. And the common feature in every one of those results and in every part of the country was the unpopularity of the government, and I'm sorry to say, genuinely sorry to say, the unpopularity of the Prime Minister. And it's not just a question of popularity, because let's be honest, in modern politics at the moment, we're just slightly below traffic wardens and estate agents in the popularity stakes, and that's probably not going to improve anytime soon. What I observed up close in government was a lack of vision, direction, and drive. And if there's one thing that I am absolutely certain of, particularly in the wake of the war in Iran and the ongoing crisis in the Strait of Hormuz, it's that the challenges facing us are becoming harder, not easier. The choices and trade-offs are becoming more stark. So you need leadership and grip that is able to make decisions and make those choices and trade-offs and then articulate them to the country so that you take people with you. They understand the national story. They understand the vision and direction of the government. They might not agree with everything we say. They won't agree with everything we do, never will. But they'll go, well, you know, I might not have agreed with this policy or that policy, but I understand where this government is taking us. I understand where this Prime Minister wants us to go. And if we're honest with ourselves as a party, that is not where this country is. That is not how they perceive us.
The former UK Health Secretary Wes Streeting there, who's, of course, expected to challenge Keir Starmer for the Labour leadership and therefore the keys to number 10 Downing Street. Well, this has cast the doors open to a broader debate. The Business Secretary, Peter Kyle, warning his Labour colleagues against pursuing redistribution of wealth without first prioritising economic growth. It comes as the party faces this potential tilt to the left if Starmer's replaced as Prime Minister. Let's get some analysis now. We can speak to Bloomberg opinion columnist Rosa Prince. Morning, Rosa. So you've got Kyle warning against a shift to the left on economic grounds. But also, is it politically expedient to be pulling left when Labour's fending off this threat from Reform UK on the right?
That's such a good question. So we're in this kind of phony war where we're preparing for a leadership contest that hasn't actually begun. And don't forget that the people who take part in any contest are Labour Party members who tend to be on the left. So I think what's happening is that those on the right of the party or the centre of the party are kind of setting out their stall, you know, saying, don't do this, don't drift to the left. The main proponent of that would be Andy Burnham, who is fighting this by-election to try to get back into Parliament so he can challenge Keir Starmer. He's seen as a kind of front runner if this contest ever does actually get going. And I think they're sort of saying to him, you know, be careful, as you say, watch out for the markets, watch out for reform. But there is a very vocal strain in the Labour Party who says, you know what, our threat doesn't just come from Reform UK. Labour has lost just as many votes to their left, to the Green Party. So this is a conversation that is playing out in these sort of strange early summer days where we're waiting really to see when and how Keir Starmer actually will be kicked out of 10 Downing Street.
Yeah, interesting comments from Streeting also in that conversation that he would fight against Andy Burnham if they went head-to-head in a race. It wouldn't just be a coronation, he said, even if he is a monarchist. But how are they faring against each other when it comes to polls? Is it looking likely that if Burnham can win this by-election, then it is Burnham who takes over from Starmer?
It really is, yeah. All of the polls show not just that Andy Burnham is way more popular among Labour members, but also with the wider public. He has been the mayor of Manchester. He was very popular there. I think one of the reasons that Labour's so desperate to get him in is because the polls suggest he's really the only politician in his party who has that kind of popular appeal, who voters like. He actually has a plus positivity rating, which is a rare thing in British politics these days. So I think Streeting, you know, he sort of has to say this, that he'll be in the race, but I think his best bet is if Andy Burnham actually loses that by-election in a couple of weeks and is therefore ineligible to be in any contest. So I think he wants to be there or thereabouts in the mix in case something happens and he can jump in.
Okay, Rosa, thank you very much. That's our Bloomberg opinion columnist, Rosa Prince. And don't miss Rosa's latest column on OPIN Go on the terminal. I believe she'll be looking at Starmer's accusation that Nigel Farage is exploiting the murder of a British teenager for political gain. So more on that on the terminal. Now, Bloomberg also understands that Ukraine's key European allies are working on plans to engage Russia and Ukraine in negotiations to end the war. Sources say that the allies see a shift in momentum, strengthening President Volodymyr Zelensky's position. Let's get more now with Bloomberg's team leader for Russian government, Anthony Halpin. Tony, good morning to you. What do we know about this diplomatic effort? Great scoop from the team.
Yes, I mean, it's the big three economies, the UK, Germany and France, as you say, looking for a way, a possible opening to engage with Vladimir Putin alongside Ukraine and basically to bring Europe to the negotiating table. They've been sidelined for years. They've had very little contact with Vladimir Putin throughout the war, and the US has led negotiations such as they've been until now. But the US has stepped back because of what's happening in the Middle East and Iran. And European leaders think, well, there's an opportunity here for us to get to the table. And particularly as there are signs that Vladimir Putin's suffering more now than perhaps last year. The economy is creaking rather louder. And there are signs that the number of casualties that Russia's incurring each month is going up. So they see an opportunity and they think they can exploit it if they can come together with Kiev to present some kind of opportunity for Putin to engage. As we said, it's not a unanimous view. There are some within those countries who say that, look, this is not the moment to engage with Putin. He is weakening. We should be tightening the pressure. We should be increasing sanctions. We should be making it harder to force him to come to the table rather than giving him an off-ramp.
Yeah, I mean, you told us yesterday or earlier in the week that Putin's somewhat immune to that economic pressure. We'll be hearing from him, we're expecting to, at a summit in St. Petersburg today, hours after Ukraine attacked the city. Do you think that he's likely to engage with this latest peace effort, Tony?
Yeah, it's difficult to know. Putin has said often that, it's not Russia that's broken off contact with Europeans, it's Europe. So on one hand, he should welcome this. But equally, the Kremlin doesn't really take European leaders seriously. They want to engage really only with the US. It's a matter of prestige for them to directly talk to the one big superpower in the world rather than to European leaders. So I think it's not a given that Putin will welcome this and take up the opportunity. He may see it really as a sign of European weakness and decide that, in fact, he should press on.
OK, Bloomberg's Tony Halpin, thank you very much for the Russian angle on that Bloomberg scoop, which, of course, is available on the terminal and Bloomberg.com. We've got plenty more coming up. Stay with us for your charts to frame the day ahead. This is Bloomberg.
At some point, the revenue and the earnings multiples and the cash flow multiples all have to come in sync. And right now, you're in that phase where there's a mass amount of capacity building anticipated of demand. And so when you look at it, one of the ways that we think about is we are a buyer of these services, and a big buyer. $13 billion in technology a year, it was $250 million this year in 26 on AI-related spending. And so the question is, what's the affordability of that? That will be the interesting question, how all this comes together. But right now, it's a heck of a stimulus in the economy, that going on. But the other part of the economy that we see is the small and medium-sized businesses. And it's interesting. As you think about them over the last year we had Liberation Day, and that was confusing for people. And then we had the tax law finally got done, that settled confusion. Then had trade, then you had immigration policy, that confused people. The deregulation, they looked for that. As you watched in the fall, they were pretty sanguine. They said, look, I can see how this all plays out. And then a lot of it got put back on the table. And so I think what you see in the small, medium-sized businesses, there's a lot of uncorked potential there. They can borrow on the lines of credit. They're borrowing a little bit more. The loan growth's solid. They're mid-double digits and things like that, which is good loan growth. But they have so much capacity if they just had a little more certainty. And that's why they really want the war to end. So their input prices will come back down, because we see the gas pump. What really happens longer term is the products made with petroleum products come.
So kind of like through. At the gates, ready to go once
they're ready to go, and they just want certainty. Because if you're a big company like ours with 200,000 people, you have lots of people who pay attention to all this and tell you what's going on. Our research team, the best in the world. If you're if you and I owned a business and we were doing something, you have to do all that work yourself. And the easier to do that work, the more time you can spend on creating the revenue. So I think there's a little bit of a pop left out there beyond the AI, which is an unbelievable amount of spending and et cetera. There's another pop when general business gets more confident about the future path.
Bank of America Chairman and CEO Brian Moynihan speaking exclusively to Bloomberg's Danny Berger. Well, that S&P rally that we've seen over the past 9 sessions did hit a wall yesterday. It had been driven by the AI trade, but it ran into the Iran tensions and the rate hike fears. So the 9th session streak coming to a close yesterday. Now the question is, can that 9-week streak carry on if we can get a rebound over the next 2 sessions? But flip the board over, and speaking of those rate hike fears, we got more US economic data yesterday in the form of the US ISM services numbers. Pretty much what we saw was the inflation story heating up, so stoking those rate hike bets for the Fed, the chance of a September rate hike, because prices paid were at the highest since 2022. So front-end yields rising, as you can see here. But flip the board one more time, because we've seen all of this macro volatility. Of course, that has been putting pressure on one particular part of the market, private markets. Investors really in this dash for liquidity and transparency. And as you can see in the white line here, Partners Group, the latest to get whacked, capping withdrawals at one of its private equity funds amid all of this heightened redemption pressure. But you can get all of these charts that we've used today and across Bloomberg TV at CHRT TV Go on your terminal. Just a look at the risk events for today. We've got initial jobless claims, BOE Governor Andrew Bailey speaking, and some Fed speak from Mary Daly and Tom Barkin. The opening trade's coming up next, and Guy and Tom will take you all the way to the market open. This is Bloomberg.